All right, welcome to this weekend market analysis. I hope you enjoyed your weekend and I hope you were profitable last week. For us, the market didn't really offer plenty of trading opportunities. The good thing is that the ones we took, we were super profitable with them. Okay, that's because we're in line with our trading strategies. We are not in discipline, okay, so to speak. We were very disciplined with trading strategies. We made sure we only took trading opportunities that conform with the trading strategies. Okay. All right, looking into this week, we have quite a number of heavyweight news announcement that will be released for this week. It's going to be a very volatile trading week, and so you have to exercise extreme caution in all of your trading activities. Okay. First, aside from the other normal high impact news events, you are going to be having the monetary policy meeting, which will be affecting the Australian dollar on Tuesday. All right. Fortunately, there is no news announcement on Monday, so Monday we can trade. But Tuesday we have the first one here, monetary policy meeting, that is going to affect Australian dollar. It might cause some volatility. Another one is the tentative Brexit vote, which is coming from the sterling pounds axis on Tuesday. We will be waiting again to see what will happen with the sterling pounds in case the election results or the voting results are released. Now, the most powerful of all is the FOMC, which will be affecting the American dollar. You can see that interest rate announcement from the American dollar axis on Wednesday, March 20th. That is a super high quality event. High volatile event. You want to be very careful trading American dollar around that time. All right, now bank holiday from Japan on Thursday, or Japanese yen pairs might go slow. Then we have the employment change. This is another heavyweight high impact news announcement that will be affecting the Australian dollar. You need to be very careful trading that. It is in other words called the NFP for the American dollar. Okay, it's a similar one. If we move down, let's go down a bit. We have the EU summit, the European Economic Summit. You have this also probably slowing down price action as that summit goes on. Aside from Brexit, we are also having interest rate announcement for the sterling pounds. This is a huge one that should be affecting all sterling pounds crosses. You really want to avoid trading ahead of this news. Once this news is released, we are likely going to see very volatile price behavior across all sterling pound pairs. All right, I think that's just basically it for the abnormally high impact news announcement. At any rate, you want to pay attention to all of these high impact news announcements that you can see in red. Okay, once they're in red, they have high impact events. You want to be extremely careful with them. All right, let's move into the charts and see what's been going on. Well, it has not really been an interesting trading market for some days now for us. If you look into the weekly time frame of majority of the pairs, you will see the kind of thin market volume that we have had over time. Price has just been sideways in very thin volume. That type of market is difficult to trade. Looking into the daily time frame for the euro against the American dollar, we have already analyzed this many times before. Price is still within that channel, and this channel is suggestive of the fact that price is likely going to break to the upside. So you need to be extremely careful hitting on your sell button anytime in the euro against the American dollar. For what is happening here, to me looks like a trap. All right, looks like a trap. Many traders would have been going short around in there, not taking into consideration that price has not reached that level of resistance. All right, that level of resistance. You always want price to bang off the level of support and resistance before you want to trade. So if you are looking to go short here, be very careful. For me, I am not taking any trade here. We need to wait to know a clear directional hint. More so that FOMC is scheduled for this week. It's going to affect the euro against the American dollar pair. Okay. All right, let's look at the euro against the New Zealand dollar. Let's see the weekly time frame. Weekly time frame, you can see that price for the past few weeks, price has been in a very thin market volume, like I was saying, and so that's a very difficult thing to trade in the market. In the daily time frame, let's keep a level of support. This is the last swing low, or the lower is the swing low. Let's keep that one. Just keep that line within the weekly, daily, and shorter time frames. Then we can also use this line. If we want to keep this high, we can keep that, but for now it's still too far for me, so I just want to keep these harmonic levels where price has been reacting off. You can see those reaction. Okay, it's quite harmonic. Then I will want to anticipate a lower level. I will want to anticipate a lower level. Okay, what do you see now? The possibility of a channel formation. So for those of you who are looking to go long around that level, you will not only be violating the possibility of this channel, you will be trading against that level of resistance. Okay, that level of resistance. If you hit on your buy button here, you have traffic ahead. You need to be extremely careful with that area. It could break to the upside, but hey, we don't want to put ourselves in that condition of trading against that level of resistance. If we have to go long, then we need to wait for price to come down somewhere in here where we may have that counter trend line, and also we have the previous swing low coming around that area. So right there is where we'll be looking for our buy entry, and not here. Okay, not here. Right, so that's it for the euro against the New Zealand dollar. Let's move on to the next pair, the Australian dollar against the